I get it. Taxes can be super complicated. Before I became an accountant, I knew nothing about taxes. I'd show up to my accountant, give him my tax slips, and just hope for the best. I didn't know what he was doing. Whatever numbers he gave me, great, cool. I didn't know what was going on. And I have a feeling a lot of you are in that same situation, so I am begging you, please take 5 minutes out of your day just to watch this video to give you just a basic understanding on how taxes work. So here in Canada, you pay two types of tax. You pay a provincial tax and a federal tax. Everyone pays the federal tax, and depending on where you live in the province, you pay the provincial tax. And we also have a progressive tax rate. So the more income you make, the higher the tax rates become. So you can look at tax brackets almost like buckets. Once you fill the first bucket up with that tax rate, you move on to the next bucket with a new tax rate. Not all of your income's taxed on the highest tax bracket. Now, come tax season, you probably have a handful of tax slips, maybe a T4, a T5, a T3, a T4E. Now, all these slips represent the type of income that you made that year. So for example, a T4 would be employment income, T5 would be investment income, a T4E would be unemployment income. So let's use Karen here as a prop, as an example in this situation. Let's say Karen made $40,000 that year and she paid $4,000 in taxes. Let's not focus on the $4,000. We'll refer to that at the end of this video. But Karen made $40,000 of total income. She can use these things called deductions to minimize her taxable income. Deductions, some examples of deductions are RSPs, childcare expenses, union dues, professional dues. So in our example, let's say Karen has $5,000 of deductions to bring her taxable income from $40,000 to $35,000. Now we have to determine what her provincial and federal tax liability is based on the federal and provincial tax rates. In our example, let's say Karen has a $3,200 federal tax liability and a $1,200 provincial tax liability. So now what can Karen can use these things called tax credits to minimize her tax liability, both federal and provincial. There's two types of tax credits. There's a non-refundable tax credit and a refundable tax credit. A non-refundable tax credit can only bring down your tax liability down to zero. That's the best it can do. So for example, let's say you have a $5,000 non-refundable tax credit, but have a $2,000 tax liability. That credit can reduce your tax liability down to zero, but whatever you don't use, you lose, right? But let's say you have a $5,000 refundable tax credit and a $2,000 tax liability. You're able to minimize your tax liability to zero, and you're able to get a refund for the amounts you did not use. Hence the refundable tax credit. So let's say Karen has a $700 non-refundable tax credit federally and a $200 non-refundable tax credit provincially. This would reduce her federal tax liability from $3,200 to $2,500 and her provincial tax liability from $1,200 to $1,000. So her total tax liability would be $3,500. All we're doing here is we're comparing her total tax liability for the year to what she actually paid in taxes. So she actually paid $4,000 in taxes throughout the year. So she overpaid, so now she's getting a $500 refund. You have to understand, throughout the year, whatever you're paying in taxes is an estimate. Your employer does not know what tax credits and deductions apply to you. So they estimate how much taxes they're gonna take out of your paycheck. And then that's why it's very important at the end of the year to have an accountant that maximizes your deductions and your tax credits. If you don't have an accountant, I know a guy, he's really, really good. So guys, that's all we're doing here. We're taking your taxable income, we're subtracting it with any deductions that apply to you. We figure out what your provincial and your federal tax liability is. We apply tax credit to reduce that even further, and then we compare that to what you actually paid in taxes. Easy, right? Done. Hey guys, I know I'm new to this whole YouTube thing and this is only my second video, but 13 subscribers, 13. If you felt like this video was helpful, I'd really appreciate it if you hit the subscribe button. If you haven't already watched our taxes on the CERB video that we did, goes through kind of the taxes you will owe on the CERB payments you received in 2020. It's very beneficial. Click the video below to watch that. And if you're watching this on social media, please head over to YouTube, Advanced Accounting Group, hit the subscribe button. Really, really appreciate it.